The headline was doom and gloom, property prices are going backwards. You go into the article and they're quoting CoreLogic, capital city growth data for the month of April. Okay? They have grabbed onto Sydney and Melbourne that have gone backwards 0.3 and 0.4%, right? They didn't talk about Brisbane that grew 1.9% in 1 month, or Adelaide that grew 1.7% in 1 month. Forgive me, Perth I think was 1.1% in 1 month. The majority or all of the other areas grew in value apart from Sydney and Melbourne. We know that Sydney and Melbourne, Sydney in particular, had a record bumper late 2020 into 2021. It is at the market peak. It's in a correction and slowdown phase. You know, other markets are back, in different segments and different phases of their cycle. All of this talk about interest rates, Ukraine, elections, it might be a good storyline, but this is really important. It is not a large enough event to bring all of the states or all of the cities into alignment. It's not a big enough impact at a macro level to bring Sydney and Brisbane back into alignment. Brisbane's racing off into the foreground. Sydney is correcting and consolidating. We knew that. All right. So in the key investment grade markets that are at their buying window in the upswing or at the peak of the market, it is extremely difficult to buy at the moment. More difficult than I've ever seen, okay, professionally or for my own investment, and it comes down to one thing. There's $170,000 properties available for purchase today, 55 or so thousand of them available for rent. And that is at record low numbers, 50% of what was available, a couple of short years ago. People are still extremely active. Buyers are buying, wanting to buy. Owner-occupiers are wanting to own. Investors are wanting to invest. Okay? There is a lot of evidence, extremely, very compelling evidence that when interest rate rises, right, due to inflation, the cost of your money is devaluing faster than the interest you're paying back to the banks. A loan actually becomes an investment in its own right, okay? That's called negative real interest rates. And in negative real interest rate times, smart money, institutional money, family office money, sophisticated investors pile into safe haven blue chip assets. And guess what the number one asset class is for that? Property. Others currencies, but property is right there in pole position. You get a lot of money pouring into property in these types of environments. The heat has not gone out of the market. The heat has been out of the market for some time in Sydney and Melbourne, but in other markets, I have never seen so much heat